All right, good morning, guys.
Morning.
Who wants to share their analysis for the week?
Well, give me tea.
Let me mute everyone to be on the safe side, and I'll. Morning, Jesus. Who wants to share? Who wants to outline how they plan for the week? Guys are so shy. Knowing how to analyze is not enough, guys. You have to do it. So who wants to do it? Everybody's shy. Wow.
Like I'm already finished, but I can share. I don't mind.
Miko?
Yeah, I'm already finished with what I have, but
All right, cool. I'll stop sharing so you could share. Then maybe I'll share a little.
okay.
Okay. All ears. Take it away.
Okay, I just did EU for today, honestly, because today is like sentiment-driven markets. I'm not really interested in trading anything outside the news, but for me, daily equal highs here are still the draw. And then big figure, go to the weekly. I think we can see it a little bit better. I'm new to TradingView, so yeah, don't mind me. Okay, so yeah, these daily highs are the draw for me, but if we want to keep pushing still, I see this imbalance as the first area of interest. If we respect it, then we're gonna see price push to a daily equal highs. If we close below it, I want to see this traded back too, but this is balanced for me, so I see this as more likely, especially because we are so close to the daily equal highs. What else do I have? I also did NASDAQ today.
OJ, wake up.
What's up?
I think that was probably an
Sorry.
accent.
Yeah, and then also NASDAQ, if I go to the weekly, this is still like in a consolidation for me. If I go to the daily, wait, what was it? Was it daily? Oh no, it was the weekly, I think, yeah. I was looking at this candle's low and not low, open, and this candle's open. We're still below these two order blocks. So yeah, I expect some sort of premium to discount and fair value. So if you want to start pushing from here, this order block is what I see. But because we're on a consolidation, I think this low is more likely, and then yeah, right from there. But then again, I'm just gonna react off of what the market gives me, and this is what I have analyzed for today. But I will go back to trading tomorrow. So yeah, all the other pairs, I will do that tomorrow. Yeah.
All right, all good.
That's
All
what
good.
I have.
Thank you for sharing, Miko.
Yeah,
Anyone
no
else
worries.
want to share the analysis? I can in French. Not sure. Not sure. All right. Do a little sharing as well. I should be seeing my trading view. I'm gonna go back to. I don't remember who taught me this trick, but loving it. Absolutely loving it. I'm gonna take all this analysis off. I don't start my trading, like my analysis, on a weekly chart. I like to start on a daily chart. For weekly and monthly analysis, I only find them to be, I guess, important for my trading at the start of the month, at the start of the year, or whatever. But as the week has already started or the month has already started, I don't feel a need to go to a weekly chart. So what I do is I go to a daily chart, and there are two things I want to know. I want to know the daily order flow and the daily drawn liquidity. So this daily order flow is bearish, full stop. And I'm trying to find the daily drawn liquidity. These are the things I factor in mind. Weekly opening price. And the obvious things. If this market is bullish, it's going to be reaching for something higher. Whatever that something is, it's going to be above that price. I don't know where it is yet, but it must be above that price. And if it's bearish and reaching low, it's going to be something below that price. So if I'm bullish, this guy here, what would be my upside draw? My first upside draw is going to be buy side liquidity, and then maybe imbalances. So where would I look for buy side liquidity? Right here. When we're coming down, I'm looking for when was the last time we ran a previous daily low. When it did that, I'm looking for the daily, well, lies. I'm looking for the last time it ran a previous daily high. Then I'm looking for the daily high after the run on highs that we're not taking. So if you take a look at this, daily high is taken, this would have been my upside draw. But this is taken. So after this day to previous daily highs, there are no other daily highs here. Which means if we're expanding, I'm not looking for a shallow expansion. I'm looking for here or here, because this was the last time we took a previous daily high. Coming down here, all of these are lower highs. So that makes it low resistance framework. So I'll do that. And that's my draw on liquidity. Now, once I have that draw, the next important thing is what invalidates this setup? What invalidates this idea? Well, this idea being invalid would be something going lower, some deliver lower. So I could either look at where is sell side liquidity below here that we could want to target, or I could look for something from a structural standpoint that would invalidate bullishness. All of this right here is price trading lower. If price is trading lower, the order flow is likely be delivered on sell side, which means down candles lows are being taken out and close below. Up candles lows are being taken out and close below. Up candles highs are staying in the market. When we take a look at right here, we're having a whole lot of that. All these wicks inside here, we're not closing below them. Why are we not closing below these lows? Why is this support idea being painted right here? I don't know. But what I'll do is, this is the lowest body in the previous swing low. This is potentially a rejection block. So for bullishness, I don't want to see price get back above here, one, then get back above the lowest closing down candle that's right here. Which means for bullishness, that's my first confirmation. A solid close above here opens the door for this. Nice and simple. So for me, I think DXY should be drawn higher short term. I think ultimately we're bearish because banks are pricing in more weakness. So I'm looking at this low. On my broker, this was 101.26, and that got tagged last week. So this area right here, let me highlight it. That's the most important portion of price action for me, right there. Because this is the last time we expanded in this area. The down candle that started that push is that. Let me take this box off so I can get that. All right, that's the high. So I could go as far as to say, can we see any willingness from price to break outside here? But then this is multiple analysis, not just for 1 week. And what do I have? That level overlapping with that other level, whatever that was. So now I would look at this imbalance as an imbalance that would need to get filled, and that would be my draw. But there's nothing right here overwhelmingly bullish that confirms the XY being bullish. So I don't want to see this first and then higher. As long as this doesn't get taken, this should stay bearish, and the draw on liquidity should be there. Nice and simple.
Hey, Kish,
Hey,
check the chat and remove this Parmesh guy. Kick out this one.
there we go.
Yep. Thanks, man.
So that's what I've been looking for bullishness. But I'm bearish DXY because of what I see from a fundamental standpoint. Let me share a little of my fundamentals. I think I'm sharing the entire screen, so you should be able to see.
Yeah, we can see it. We can see it.
Counting on the FOMC, you could find this by simply Googling CME FedWatch tool. FOMC provides the most insights to interest rates. FOMC decides if interest rates are going to go higher or lower, and then that ultimately sets up how banks price in their interest rates. 9 days until that happens. There should be a chart here. I don't know why it's not showing up. There it is. This right here gives a good idea as to what the banks are expecting. I'm not going to make this a fundamental call, but what I'll say is the current interest rate for the US is 4.5. If we have increases in basis points that are 25, 50, that's likely to continue DXY weakness. If we have basis point increases that are 50 and above, then this is going to be strength. At the moment, right, keep in mind that the rate is 4.5. So this 425 here, this is 4.25, this is 4.5, 4.5, 4.75. They're pricing in that the rate is either going to stay at 4.5 or it's going to have a 25 basis point increase. This is going to lead to more weakness on the dollar. If this is what they're expecting, this is going to lead to more weakness. So if they're pricing weakness and this guy is weakness, there's nothing that stops this from going lower, unless it's a quick liquidity grab. So for that reason, I have remained bearish on DXY. I may have said that publicly in December. No, I said it privately for sure. But that's why I was bearish. So if you're going into all markets with an expectation that this is likely to be bearish, I mean, DXY is likely to be bearish, we have to start assuming, okay, where did the week open? Right here. Where's my upside draw? This is the last time we took out highs. This was a daily high that was just below it. That's already taken. These daily highs become my draw, which is why the week before last week, I had 12,000 marked as my upside draw. 11,600 here and then 12,000 up here. After this, we got a shift below Monday's low after price tagged in here. I was looking for a sell side run. So in here, I did the same thing again. Where's the last day that took a previous daily low? All the way down here, which means the higher lows after this becomes draw, which means this is my draw, which is why I had this. But then this had 3 days and I wanted all of them. So when this was taken, I was expecting Friday to be a retracement and then a short, a continue low. And then out of nowhere, Friday just screamed higher. Completely unexpected for me. So with today being not as volatile, I'm waiting for more information. Okay. So I'm allowing Monday to do whatever it wants to do, and then Tuesday I make my decision. There's a whole lot of high impact news coming out Tuesday. I think Tuesday, Wednesday, Thursday, or is it Wednesday, Tuesday, Thursday, and Friday? Yeah, that should be Tuesday, Thursday, and Friday are going to become extremely volatile. So it's a waiting game for what they want to do with there. And then gold, same idea. This was probably last week's analysis. So let me remove line and open. This day took that high, so this is not the draw for me. It should be drawn higher, so I'd have to zoom out and go over here and look for what's my buy side objective that's above this line. $38 and 35. There. So nice and simple, no overthinking, no multi-time frame. Thursday I expected a continuation to 11,200 so I could buy it to 12,000. That's what I wanted. Why did I have 11,600 marked? Okay, so this, I'll share this. The same thing that we just did on NASDAQ, I did that at the start of the year. I'll clear all of this off. So go to the start of the year. Don't trade the first week. So this Monday was essentially the start of trading. So this is how I'd seen the chart at that time. Just get rid of all of this. And let's grab weekly open right there. So same idea. If you're expecting higher prices because the XY is still bearish, where's the draw that's above this? These highs were not taken. So that's the first draw. Not taken. Big imbalance. This is premium imbalance. So I was looking at the fact that we have this daily consolidation right here. And I'm going to move this line, put it right here at 50% of the daily consolidation. So my liquidity draw, or my draw for price, was daily consolidation equilibrium and higher into premium arrays. So now when I take this off, we go back here. The idea is at this point in time, I'm looking for these levels to be traded to. So the week from here to here, I believe, should be drawn to these levels. All that good stuff. When we got here, this was the Friday. We hadn't reached the objective, so I held this over the weekend. TP here, and on that chart, if you remember, you would have seen me highlighting 11.6, and my TP was all the way up here because I was expecting that push to 12,000. So shallow retracement and then 12,000. That's what we're seeing right now. When we got to this week here, that was the Monday, I did the same thing that I just showed you. Identify the open, what's above the open that we could expand to if the week is bullish. Here's my buy side draw. We got there on Tuesday. Then it started to break down. Where's the downside draw? 11,350 was the price I gave you. Midpoint of this is 11,341. There's nothing significant about a 41 level, so I use a 50 level, which is right there. So that's why that was my draw on the downside. That and then the confluence of this old daily low from the previous week's Friday. So yeah. There you go. So you could do that on any pair. So grab your pair, grab your weekly open, go to your daily chart. Forget about using a million different time frames. When ICT says I want speed coming here during a trade, I believe it's a particular time slot. Not always a particular time slot. Sometimes it's price action confirmation. So, okay. This was something I was going to walk through with my group, but you just stay 1 second and I'm gonna load up the video I did last week, and I'll show you what you should see instead of just liking it for being a nice video. So let me pull this to this side of the screen. So confirm that you're seeing my Telegram, please.
Yeah, we
Yes.
see it.
Okay. We're gonna go through this video. I'm going to. Okay. So I want you to watch this video, but don't watch it with the mindset that, oh, it's a trade recording, really, really nice. No, we're gonna look at it from what was the confirmation that made me feel comfortable selling, adding positions, managing the trade the way I did. All right. For the guys in my private group, this is the next lesson. This is called my markers. We'll do that video sometime this week or in February. So
Exciting.
Yeah. Time to come home.
I'm home.
Hassan here.
Hassan. Let me mute Hassan. Oh, I just realized what you're saying. No, I have some time today, so yeah. So first off, I want you to take a look at this range of price, right? I want you to take a look at this. Wait, let me change the color. Take a look at this high. You see how that high is traded? All imbalances are filled. That's efficiently traded. When price returns to an efficiently traded range, I want immediate rejection. If I'm wrong, this should close above the high, and then that would be the end of it. We shouldn't have price reaccumulating inside a balanced price range, because if it's balanced or efficient, it's offered to both sides, so there are no pending liquidity. If it's inefficient, then there are pending orders waiting to get filled, whether they're buy orders or sell orders. So this is efficient. I sold here. No, selling there. Off, grab a line. I'm selling with the expectation that this is a M1 dealing range, because there's a short-term high right here that was rated, short-term low that was rated. This is range expansion. That's what I'm expecting. So I'm watching this leg and this delivery to identify where should these retracements form and what confirmation should I get from this leg. So let me say that again. This leg shows me where the retracement entries are going to form. This leg shows me what confirmations I need. So if price is breaking something here, if price is closing below something there, that's what I'm going to use to watch, to monitor and manage my trade. So I want you to pay attention to those two things as we move through this video. That's the focus. So let me go play. So here's the high I was talking about. Again, watch right here. Watch this wick in particular, because this wick is buy side, then sell side, then buy side. Definition of a balanced price range. If we're expanding and balanced price ranges are giving way, there's nothing to stop this price. All we have to do is submit the time. So again, inside this leg tells me where the retracements are going to be. So let me just point it out. I'll point out in the video, but because I didn't openly say this, there's an imbalance right here. Right in the inside right here. So even though this is a balanced price range, when we close below it, bodies should not go above, but spreads are real. So the retracement could have bodies staying inside here, but wicks coming up there. I'm fine with that. If I wanted, precision, I'd aim for that. but there's nothing that says this has to take place. It's just a potential possibility. The bodies is where the bulk of the volume is going to be. So keep that in mind as you'll see me outline that. That's the M5 chart. 2 candles, relatively equal lows. That's my draw. That's a liquidity. On this time frame, you'll see the dealing range again. Old high taken, this low taken, retracement in the premium, expand. That's the plan. The person that asked me the question about when ICT said speed, take a look at this, right? If this is the dealing range and it's efficient and we retraced, once we start expanding and it takes this low, there's no reason for the delivery to be slow. Inside this low to that high, we could have slow delivery as prices rebalancing inefficiencies, breaking structure to give you confirmation. All that can be slow. Once this low is taken, speed should come in. So towards the end of the video, once we trade below here, you'll notice I come off the 1 minute chart because the speed and the objective should be clear on a 5 minute chart. So let's watch. Oops. So here's that BPR I was talking about. Now that it hasn't happened yet, but I want to see it close below here, reject and lower. So my limit is set at the most ideal price level because I'm expecting price to wick through here to try to get back up into this. So I could sell here and put my stop here, that's fine. But because I'm expecting a higher run, I'm allowing for myself to get a better entry. There's that all imbalance tagged. Now that's all I want to see from this upside delivery. We need to start trading lower now. So mile markers are going to be, if price moves away in the direction that you're expecting, what are going to be the minor accomplishments that makes this trade good until it becomes great? You want to see lows being taken. You want to see certain up candles, lows being taken. You want to see certain up candles acting as resistance. So keep that in mind as we continue through the video. And remember, you don't want to see price close above the BPR once it trades below here. So this line is the first mile marker. That low needs to come out of the market. Once the BPR has been tagged, that's what you want. Next thing to note is how you manage this trade. Sometimes the trades go good and then they turn around. So you want to have a logical approach to managing. This arrow at the top is me saying my stop goes here once I get confirmation below the blue line. Confirmation, we have a solid close below the mile marker. So allow for retracements before you move your stop, or you move your stop into the retracement. This fractal requires nothing above the balance price range. The only portion of this that requires any amount of rebalance is going to be this. Imagine this wick isn't there. All you'd have is that big sell side delivery. And if you can see R3, watch how this gets worked. Wink, wink. Let's close this and that's where my stop is going after confirmation. Notice no rush to move the stop. Why? You haven't gotten confirmation yet. So this is the hard part, submitting. It's cute when the video is sped up, but this was about 10-15 minutes of them doing that. But the if this then that approach says do nothing, Kishane, so I did nothing. This low needs to get taken first. Note that this candle just tapped the balance price range. This is now another high that should stay in the market. So the delivery afterwards is very likely to use this up candle as a propulsion candle. So watch out. I'm going to move my focus to this up candle's low for all the confirmation going forward. That's confirmation of a solid close below here. So now these retracements can tap these minor imbalance right here and right here. So you don't move your stop when the retracement is happening. You move your stop in anticipation of the expansion away after the retracement is done. So that high should stay in the market. That's my first invalidation level. If we get back above this, consider cutting the trade. Mile marker again. We broke away aggressively from here, left a gap. If that low stays in the market, then this was likely a stop run and we're going to push higher. If that low is taken out, then there's nothing stopping price now from leaving this range. That's the first initial run on the low. This is where you want speed. So for the guy who asks, this is where you want speed. Forget about the time. The delivery here is suggesting that we now need speed to leave this range. So hop off the 1 minute chart. Everything inside that range is done. This is now the draw. There's no price action right here to pay attention to. So just that low and potentially lower. And that's the speed you want. All right, so I think that was quite a lot for today. Yeah, it's almost 8 o'clock. Well, it is 8 o'clock. So I'm gonna go get ready now for my day. Hope this was helpful. Let me check the chat. Price takes was previous day high and closes low the previous day low. What does that mean? If it takes previous day high and previous day low, put that in the chat. There's a whole lot of questions in the chat that I don't. I'm likely going to miss. Put them in the discussion channel so we can talk about them and we could keep them for reference. Outside of that, thanks for hopping on. Have a great day. Be careful today and be careful.